The peace deal with Iran just unlocked an opportunity most investors don't even know exists yet. I'm talking about companies with explosive revenue growth, massive addressable markets, and zero mainstream attention. The kind that can double, triple, or more when a macro catalyst this big hits. In this video, I'm breaking down my top under-the-radar picks, the names I'm personally putting real money into right now. All my buy and sell orders are now directly connected to my Discord, so I'm an open book. And the upcoming 7 stocks I've been buying heavy these last weeks, which brings us to the first stock on the list that is gaining some serious momentum, but it's still down 50% from its all-time highs. The stock is called Genius Sports, and they are forecasting that their revenues will increase by 55% in the coming 12 months, and their EPS a shocking 62%, all visible in their beautiful revenue chart and the turnaround earnings chart. And the crazy thing is that the stock is trading at a price to sales ratio of only 2.5. A company growing this fast should not be trading at these valuations, and especially not if you know what's happening behind the scenes. Genius Sports is essentially the operating system behind modern sport. Think of them as the invisible tech layer connecting leagues, sportsbooks, and advertisers. They are the official data, technology, and broadcast partner that powers the global sports, betting, and media ecosystem, used in over 150 countries worldwide, and trusted by over 1,000 organizations. In plain English, every time a sportsbook updates its odds in real time, or an advertiser targets you during a live game, Genius Sports is likely the company making that happen behind the scenes. Genius Sports holds agreements with the NFL through Super Bowl 2030. This is a monopoly-like arrangement on NFL data. Genius recently closed its acquisition of Legend, a major online casino and sports betting affiliate network, and the market initially overreacted negatively. Genius Sports disclosed that senior management and board members bought roughly 1.4 million of the company's ordinary shares, right after the stock sold off hard following the Legend acquisition announcement. This is the most bullish kind of insider activity. I'm forecasting in my Mr. Invest sheet that the stock has the potential to be between a $16 stock and a $24 stock by the end of 2028. That's around a 200% increase from current levels. This is all based off analysts' forecasts and the company their own guidance. The next stock on the list is a stock that exploded a month ago and is after the recent pullback offering an attractive entry point, and the stock is called GCT Semiconductor. I have never mentioned this stock on my channel, but if you have joined my Discord, you would know that I have started buying this stock back in May at the price of $1.4. And the reason for that? They are turning their business around with all engines activated. They are forecasting that their revenues will increase by a shocking 180% in the coming 12 months, and their EPS 71%, all visible in their beautiful revenue chart and the turnaround earnings chart. They are trading at a price to sales ratio of 40, which is expensive, but not if you look 2 to 3 years ahead and pay attention to their turnaround story. GCT Semiconductor designs radio chips that go inside wireless routers, hotspots, and industrial devices to provide 5G connection. Now, talking about industrial devices, GCT signed a new reference platform agreement with a major satellite communications provider. In plain English, one of the world's largest satellite companies is now building their next-gen devices using GCT's chips. That's massive validation. Satellite broadband is exploding globally, and GCT is now embedded in that infrastructure at the chip level. Analysts project GCT's revenue could jump to $38.4 million in 2026, reflecting an increase of over 1,000% from an estimated $3 million in 2025. I'm forecasting in my Mr. Invest sheet that the stock has the potential to be between a $10 stock and a $14 stock by the end of 2028. That's around a 400% increase from current levels. The next stock on the list won't look attractive if you are only capable of looking 1 year ahead. The stock is trading at a price to sales ratio of 300, and their revenues are only forecasted to increase by 8%. But fortunately, I'm doing research that goes out 3 to 5 years from now, and it's also showing that this company basically won't increase their revenues in 2026, but when you take a look at 2027 and 2028, you will see explosive growth, which is backed by production ramp up in one of the best sectors where you can invest in right now, and that's rare earth mining and processing. REalloys produces rare earth metals, things like neodymium, dysprosium, and terbium, as well as the high-performance magnets those metals are used to make. Think of these magnets as the hidden backbone of modern technology. They go inside fighter jets, missile systems, electric vehicles, wind turbines, robotics, and smartphones. REalloys operates North America's only facility that has already converted heavy rare earths into the high-performance metals and alloys required for defense systems. Nobody else in North America can do what they do. This is a massive national security problem. China has already used this power as a weapon, restricting exports to pressure Western countries. The US military is legally required to stop buying Chinese rare earths in 7 months. The Defense contractors must switch, and there are almost no alternatives. Most rare earth companies just dig stuff out of the ground. REalloys is building the entire chain, from raw material all the way to finished magnets. REalloys has locked in long-term supply from one of the largest known heavy rare earth deposits in the world, with Critical Metals Corp. They've also signed a deal with Ramaco Resources, adding even more supply diversity. The company is still pre-profit, currently burning cash as it builds out facilities. I'm forecasting in my Mr. Invest sheet that the stock has the potential to be between a $55 stock and a $77 stock by the end of 2028. That's around a 300% increase from current levels. Before we head over to the next stock, do me one favor and smash the like button if you appreciate the work and research I put into these videos. The next stock on the list is a real under the radar stock. The stock has done almost nothing the last year, and they are trading at a price to sales ratio of 1.9. But their revenues and EPS aren't forecasted to do anything this year. But what Wall Street overlooked is that they found the largest rare earth deposit in the United States. Remember, USAR had the richest deposit and METC the largest. At the request of the US government, the projected commercial timeline was accelerated, with initial commercial production now anticipated in 2027 versus 2028. Ramaco signed an agreement with REalloys, the stock I just covered, to supply mixed rare earth from Brookmine to REalloys processing plant. Ramaco Resources is a metallurgical coal producer. They mine a special type of coal used to make steel, not to generate electricity. Steel is in everything: buildings, cars, ships, military equipment, and the world still can't make it without this type of coal. Steel demand is rising globally, driven by infrastructure spending, defense buildup, and also the energy transition. Supply constraints from Australia, combined with stronger demand from India, are pushing low-vol coal prices meaningfully higher right now. Ramaco's CEO raised nearly $1 billion over the past year to fund the Brookmine project and advance its broader critical minerals strategy. METC's forward PE is about 5.5 times. They're priced like a cheap cyclical coal miner, not a company sitting on the nation's largest rare earth deposit. Wall Street got an average price target of $27. That's a 78% increase from current levels. Liquidity surged 310% year over year to $490 million, and the company repurchased $37 million, reducing share count by 5%. I'm forecasting in my Mr. Invest sheet that the stock has the potential to be between a $40 stock and a $50 stock by the end of 2028. That's around a 200% increase from current levels. The next stock on the list is sitting right in the middle of the AI spending boom, but is still trading at ridiculous valuations. The stock is down 26% the last year, while all the fundamentals like revenues and EPS exploded. The stock is trading at a PE ratio of 17, while their revenues are forecasted to surge a 100% in the coming 12 months and their EPS 72%. And I'm forecasting upcoming tailwinds like Elon Musk ordering more SMCI servers with the funds they just got from the SpaceX IPO, the Vera Rubin launch, and the increasing demand worldwide. And their core advantage is speed to market. Few competitors can ship a fully integrated AI rack within weeks of a new GPU launch. When Nvidia releases a new chip, SMCI is almost always the first company to ship servers built around it, often weeks ahead of giants like Dell or HPE. This is why the biggest AI buyers keep coming back to SMCI first. The forward PE ratio sits at just 10 times earnings, dirt cheap for a company growing this fast. Nations like Saudi Arabia, the UAE, and Singapore are investing billions in national AI clouds, and they are buying from super microcomputers. And they have capitalized on this by opening regional hubs in Malaysia and Taiwan to bypass geopolitical hurdles and reduce delivery times. SMCI is transitioning from a low-margin hardware assembler to a full-stack AI data center infrastructure provider, offering significant re-rating potential. Yes, they've had real problems: accounting investigations, legal issues, and illegally exporting chips to China. But here's the thing, the stock has already been crushed. It's down nearly 30% over the past year, even as AI spending has exploded. The risks are real, but they are already reflected in the price. You're not paying a premium for a company that still has a question marks. I'm forecasting in my Mr. Invest sheet that the stock has the potential to be between a $74 stock and a $111 stock by the end of 2028. That's basically a 200% increase from current levels. Next up on the list, we got a stock that is getting punished for a dumb reason. And the stock QXO is is now offering a very attractive entry point at $16, down 17% the last year, and now trading at a ridiculous 1.4 price to sales ratio. While their revenues are forecasted to explode by 70% in the coming 12 months, analysts are also pretty bullish on this one, with an average price target of $31. That's a 90% increase from current levels, and the story sounds even more bullish. Imagine taking one of the most boring, old-fashioned industries in America, building materials distribution, and completely transforming it with technology, scale, and aggressive acquisitions. That's exactly what QXO is doing. The stock is essentially a bet on one of the most proven deal makers in modern business history doing it again in a massive fragmented industry that has barely changed in decades. Brad Jacobs has founded 8 companies, growing each of them into billion-dollar or multi-billion-dollar enterprises. The building products distribution industry is way behind on tech. Companies are running dozens of outdated systems, using manual processes, and have limited inventory visibility. The industry has powerful secular tailwinds, including housing undersupply, aging building stock, data center construction, and energy efficiency requirements, all supporting durable long-term demand. QXO then announced a $17 billion deal to acquire TopBuild, expected to close in Q3 2026. QXO will be number 1 in insulation, number 1 in waterproofing, and number 2 in roofing across North America, while also being number 1 or number 2 in lumber and building materials in key geographies. Analysts estimate QXO has roughly $6 billion in available capital for future acquisitions, meaning the growth machine is far from finished. I'm forecasting in my Mr. Invest sheet that the stock has the potential to be between a $33 stock and a $50 stock by the end of 2028. That's at least a 150% increase from current levels. Next up on the list, we got a stock that is setting up for an insane revenue explosion, and the stock is called USAR. It's now trading at a price to sales ratio of 600, but just look at the revenue chart, going from $5 million this quarter to $88 million 1 year from now. Analysts got an average price target of $39. That's an 80% increase from current levels, and the recent headlines make the story sound even more bullish. USA Rare Earth is building a Western rare earth and critical mineral supply chain to reduce that dangerous dependence on China. This isn't just a company, it's a national security mission with a stock ticker attached. Think of it like this: most companies just do one piece of the puzzle. USAR wants to do all of it. Dig the ore out of the ground, process it, turn it into metal, and manufacture the final magnet. Round Top is North America's richest known deposit of heavy rare earths and critical minerals. USAR's Oklahoma magnet facility began commercial production in March 2026. They are already making magnets. This is not all promises. USAR completed the acquisition of Less Common Metals in November 2025. LCM is a United Kingdom-based manufacturer of specialized rare earth metals. On June 3rd, 2026, USAR finalized definitive agreements with the US Department of Commerce, unlocking access to up to $1.6 billion in funding, all under the CHIPS Act. This funding effectively de-risks USAR's entire build-out. It validates the company as a strategically essential supplier, accelerates construction timelines, and lowers its cost of capital. On top of the government money, USAR also raised $1.5 billion in a private placement, bringing the total capital raised to $3.1 billion. This company is fully funded. I'm forecasting in my Mr. Invest sheet that the stock has the potential to be between a $63 stock and an $81 stock by the end of 2028. That's basically a 200% increase from current levels. If you watched until this point, do me a favor and smash that like button. And I would suggest watching this video next, where I talk about 5 hidden gems that no one talks about.